In less than 2 months, the City of Dallas and the City Council is set to vote on a plan to create reliable funding while stabilizing the future of the Dallas Police and Fire pension.
But today, one Dallas City Council member questioned why the fund is continuing to underperform. Fox 4's Lori Brown live with the story. Lori.
Heather, it turns out the sins of the past are continuing to haunt the Dallas Police and Fire Pension Fund today, causing its returns to be well below the national and Texas averages. The clock is ticking for the City of Dallas to come up with a plan to pump more than $11 billion into the Dallas Police and Fire pension system over 30 years. City CFO Jack Ireland explained to council members how the fund began to crumble in 2016.
They identified poor real estate investments was a contributor, and the drop accounts and the structure of those, that there was a run on the bank.
The former board and pension director Richard Tiedemann lost hundreds of millions of dollars with risky real estate investments, creating a then $7.5 billion shortfall in 2016. Councilman Paul Ridley said those investments continue to weigh down the fund today.
Can you tell us whether we have written down and sold off those bad assets?
It is my understanding that they still retain, I believe, 3 of the investments that they have not.
Why is that?
I can't speak to that. I would have to have them to provide an answer. I'll get you an answer and provide in writing.
In 2017, the City and Pension Fund worked to make sweeping changes to retiree benefits and the board governance structure. But Ridley says the fund's performance today should be better.
The performance has been 2% in a period in which the stock market has soared. I don't understand how professional fund managers could earn so little on such a large fund.
Ridley said he agreed with the staff recommendation for increased oversight. Numbers from the city showed only a 1.5% 3-year return, lower than Houston, Austin, and San Antonio, and also lower than national and Texas returns for similar-sized funds.
I think we need to fire whoever is managing this investment fund and get somebody in who can actually meet our actuarial assumption is that we're going to earn 6.5% in this fund, and we're only earning 2%.
Ridley said he hopes the consulting firm the city hired, Commerce Street Investments, will shed light on why the pension fund is underperforming. Late this afternoon, I spoke with the executive director of the pension fund. Kelly Gottschalk explained that they have managed to sell off $1.4 billion in bad assets since 2016, but there are still assets that are tied up in bad investments in the oil and gas industry from the previous regime, and she said they can't just write that off or give that up because it's money that the pension fund still needs.